Ladies and gentlemen, welcome back to another weird day on Wall Street. We have a lot of news to go over, a lot of different things to cover in this video, but I'll give you a summary, long story short version here right now. Today is a weird day. I say that because yesterday it seemed like the fear in this market was around regional banks. Well, KRE fell 6% yesterday. Today, it's up 1.4%, so not a lot of regional bank fears continuing, okay? Donald Trump actually had some very positive things to say on China trade, essentially saying, don't worry about China, we're going to figure things out. Tariffs are unsustainable, that they're likely not going to go into effect on November 1st, but yet the Russell was still down close to 1% today. Huh? Why are stocks still selling off if that's the case? Doesn't make a whole lot of sense, right? Today is really a not makes a whole lot of sense kind of day. But we're going to share the news, share the headlines, try to put this market into a little bit of perspective. What could be coming next? And well, yesterday I actually made a video that I think a flip-flop is coming. I think things are about to get better in markets. Now, could we fall further? Sure, and honestly, the technicals don't look great, okay? Honestly, they just don't look great. And there's some people calling for a 5 to 10% correction that maybe that would make some sense. There's also some people that have pointed out some of your major moving averages on markets are suggestive that maybe we fall to the 100-day moving average, which is a level that we kind of hit over and over and over again in the past couple of years, right? This orange line, kind of always from like 2019, 2018 even, we kind of would come down, touch this orange line, and then recover, right? Well, we've had a bit of a decoupling, just to use a popular terminology these days, from this orange line. Ever since the sell-off back in April, it's kind of been off to the races. The last time you touched this even was back in May of 2025. So some people are saying a drop on the S&P to about 633 could make sense from your all-time high. That would be a decline of, I don't know why it does that. Like why does it do that? That would be a decline of about 6% from all-time highs. Getting down to the 200-day moving average, which would look less likely, would be about a 10.5% decline. Now, you are sitting right there pretty close to your 50-day moving average, almost bounced off of that here on October 14th, okay? From peak to trough, that would be a decline of about 3%. So there are some reasons to expect maybe we do get a little bit additional downside. And October is a volatile month, to say the least, right? It's one of the better months, but October has the most days of 1% plus swings out of any month. So up and down, October tends to give you some pretty wild reactions. But I personally think this selling is likely going to start coming to an end soon. If it doesn't, I think the mega caps are the next to go, because the fact of the matter is a lot of AI companies, a lot of high flyers have already fallen quite a bit. The mega caps are likely the stocks that, actually cause the S&P to get that 5, 6, 10% correction if that happens. So we will talk about all of this in today's episode. We have a lot of news to get into as well. Ladies and gentlemen, hit that like button as well as subscribe to the channel. First things first, if you have not done so already, what we do is we go out and find AI stocks, energy companies, software, robotics, quantum, gene editing, biopharmas that are underlooked and underappreciated, slipping through the cracks, if you will, and take decisive investments in high-risk, high-reward opportunities, right? I bought another stock today. It's a $9 billion pharmaceutical company that is targeting a cure for 30% of, cancers. Some of the hardest to treat, some of the most deadly, okay? They actually just received an FDA expedited approval permit, basically, like a non-transferable for their drug. That's in stage 3 trials right now. Hence why the stock is a $9 billion market cap company. Wall Street saying that thing probably has a pretty good chance of being approved. Okay. Stocks like this, high risk, high reward. I mean, that's what we're doing. So come check it out. Link down below if you would like to. We are having exceptional results, but that is not guaranteed to continue. You are not guaranteed to make money. Keep that in mind. Now, in broader market news today, Fed Musa Liam says there is a low probability the next Fed leader will not be qualified. So that sounds like he's trying to get on Trump's good side. Fed Musa Liam says bankers tell me credit conditions are really good. Fed Musa Liam says today another rate cut could be warranted if job risks rise and inflation remains contained, calls for caution and meeting by meeting approach amid tariff pressures, slowing labor market, and uncertain outlook. A Hamas official says the group cannot commit to disarming, calling it a broader issue that must include other Palestinian factions. Adds Hamas will remain present on the ground during a transitional technocrat-led period to ensure aid security. Seeks 3 to 5 year truce to rebuild Gaza. Israel's prime minister's office responds that Hamas must fully disarm under Trump's 20-point plan, saying the group is, quote, running out of time. Chinese Defense Ministry warns U.S. against perilous moves to arm Taiwan region. As it stands, there is a 16% chance China will invade Taiwan by the end of 2026. U.S. Atlanta Fed GDP Now tracker for Q3 is at 3.9%. It was previously at 3.8%, but again, we're not getting a lot of the important economic data that really moves GDP expectations. So this is really just a wild card number. Harvard says today, without data centers, GDP growth was 0.1% in the first half of 2025. Mexico's President Sheinbaum says today Mexico's trade talks with the U.S. are going very well. Now, this is alarming, okay? Trump was asked if high China tariffs will stand, per Bloomberg. He answered, no. So Trump said the high China tariffs are not going to stand. They're likely not going to go into effect. But yet the Russell is still down over 1% today. Yeah, that's not great. Okay, let me just tell you that now. Seems like the banking crisis fears, a banking crisis part 2, 2023 all over again, are really impacting markets. Let's take a look at the KRE. This is the regional bank ETF. It's actually up today, but it was down over 6% yesterday and down about 2.5% the day before. So there's definitely still quite a bit of fear in this area. Among S&P 500 companies, 72% mentioned AI as a material risk on their Form 10-Ks this year. The conference board found, up from 58% last year and only 12% in 2023. Trump's trade advisor Navarro says we don't see tariffs raising the cost of manufacturing. Navarro says we won't see manufacturing jobs until capacity gets built. Goldman Sachs has said there is not a stock market bubble yet. Morgan Stanley says that Zion's sell-off seemed overdone. Zion's Bank Corp Q3 loss and fraud allegations against certain borrowers spooked investors, triggering a 13% drop. Morgan Stanley says the reaction is overblown, noting no signs of wider issues and limited exposure to risky non-depository loans. Shares rebound 2.9% today. House Minority Leader Jeffries says the House and Senate Democrats continue to hold firm. So, again, it doesn't seem like the government's going to reopen anytime soon. A big earnings that I told you guys to watch out for this week actually happened today. It was American Express. Specifically because the government is shut down, we're not getting a lot of economic data on the consumer. American Express is going to be able to tell us a little bit more about how the consumer is spending. And they did. American Express says the government shutdown hasn't hit consumers yet. Amex, American Express, just lifted their 2025 EPS outlook to $15.20 to $15.50 and still targets 9 to 10% revenue growth after record $18.4 billion Q3 revenue, with credit provisions easing to $1.3 billion, suggesting affluent spending remains resilient even as delinquencies nudge higher industry-wide. So they were basically able to lower the amount of money they have to keep for potential losses. They beat on earnings, raised guidance. I mean, so far, economy looks pretty good. One of the first areas to crack will be the credit card companies. You know how many people are not going to give a rat's ass when it comes to, putting gas in the tank to take their kids to school or paying their credit card off? I know people personally that have got credit cards that have use them for a couple months like they're supposed to, right? Keeping balances below 30%, and then boom, and something happens. They lose their job, and they max out the credit card and have no regards for the credit card company. Like, could give a crap less about their credit. People got to do what they got to do. So credit cards are going to get maxed out and forgotten about long before you're seeing a recession. And that's just doesn't seem to be happening on a large scale just yet. Canada and China's foreign ministers will meet on Friday. Bessent says today the World Bank must end support for China. The WTO chief, the World Trade Organization chief, that's what WTO stands for, have spoken with China and the US to urge de-escalation of trade tensions. Both sides understand importance of dialogue. The WTO chief says any US-China decoupling would lead to fragmentation of trade, could reduce global GDP by up to 7% on a longer-term basis. And isn't this some shit? The EU offers to buy US weapons for Ukraine using Russia's frozen assets. The EU has offered to use part of a proposed $140 billion loan backed by Russia's frozen assets to buy US weapons for Ukraine. That's one of the craziest headlines you'll ever see, ever. They're strong-arming Russia. This morning, White House Hassett says we are not in a trade war with China. This comes after Donald Trump said 2 days ago that we are indeed in a trade war with China. Bessent and the Chinese vice premier will speak today, according to CNBC. So we'll see if we get any positive headlines, but we already got some positive headlines today, and it doesn't seem to be positively affecting markets. So I think it just could be some of the seasonal volatility. We've also thrown around and speculated in the trading community that maybe China is adding some selling pressure to markets. I mean, because we're getting these positive headlines and we're not getting a positive reaction. Now, it's not unusual to have a volatile October. Keep that in mind. October tends to have the most 1% plus swings, up or down, right? You tend to have big moves in October. November is the really good month, and then December is a really good month as well. China's minister says China has the right to take countermeasures against the U.S. Trump on China tariffs says, quote, we have to have a fair deal. Trump on China tariffs says, quote, we're going to do fine with China. Again, these very positive sounding headlines that are not doing what you'd expect to see in markets. And Trump on China says that he is meeting with President Xi in 2 weeks. UBS today turns bullish on global equities. UBS upgraded its global equity outlook to attractive, citing stronger growth, easing tariffs, and AI-driven investment. The bank raised its 2025 earnings forecast to 8% and expects support from Fed cuts and fiscal stimulus. UBS upgraded U.S., China, EM, and Asia ex-Japan equities, favoring tech and financials. It sees China tech EPS up nearly 40% in 2026 and says AI, power, and resources and longevity will drive gains ahead. And another very strong contrarian indicator that would say you want to be bullish on markets is, look at this, the CNN Fear and Greed Index is hitting extreme fear today. coming in at 24. Market momentum is fear. Stock price strength is neutral. Stock price breadth, extreme fear. Put and call options, fear. Market volatility, extreme fear. Safe haven demand in extreme fear. And junk bond demand in extreme fear as well. Another one that we've looked at and talked about recently is the AI investor sentiment survey. 33.7% of investors are bullish. That is down from 45.9% last week. Neutral investors are up from 18.5% last week to 20.3% this week. And bearish investors up from 35.6% to 46.1%. The bears are in control of this market, and when the bears are in control is typically when you want to be buying things, right? It's a very strong contrarian indicator that you gotta just go out, close your eyes, and buy something. Now, I'm not a financial advisor, I'm not a financial planner, but I do think these things are gonna blow over, and I do think we're gonna have a very strong end of October rally, but really November and December should be very, very strong. I still have, you know, a very constructive backdrop for 2026, and that hasn't changed at all with any of the latest developments. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel. Again, check out the link down below if you want to come join the trading community, as well as get $100 in your choice of free stock when you sign up and deposit $1,000 on Public. And let me just tell you, Public, it has got to be one of the best brokerages you could imagine out there. Okay, like, they have this tool that I really love. Okay, let's just click on this stock for an example. Market cap. So you could look at market cap over time, right? You could do this for a lot of you know, stocks. Like Dragonfly is one that we invested in quick. For like 2 days we made like 80%. It was like $5,000. Well, you could look at this stock and a lot of people will say, oh my gosh, this stock used to be $200 a share in 2022. Well, was it really? Not really. Okay, kind of. I guess it did spike to like a $400 million market cap, but what you've seen recently was the highest market cap you've had on this company in a very long time. They've had a lot of dilution, okay, and that's why, you know, the numbers look like this, right? So you can you do a lot of cool things, and it's very simplistic, kind of like a better version of Robinhood, in my opinion. So again, let me know your thoughts down below in the comment section. Oh, and all of this, you can look at like analyst targets, just right there. Click on your phone. It's a little easier to look at the analyst history too. Boom, get to see all the price targets, all of that. So yeah, let me know your thoughts on all this down below in the comment section. Have a great rest of your day, and I will see you in the next one.